Today, the Federal Open Market Committee decided to lower our policy interest rate by a 1/4 percentage point. We also decided to conclude the reduction of our aggregate securities holdings as of December 1.
So Powell admitted, because he was asked, why are the people still upset about inflation? Because you claim inflation's come way down, but people are still upset. And Powell says, yeah, they are upset, and they have a right to be upset. He said the reason they're upset is because even though inflation has come down, prices have not. And he admitted that prices today are a lot higher than they were a few years ago. But the gold that I'm encouraging you to buy is the gold that I want you to be able to use as a medium of exchange, as an alternative to the dollar, to use gold the way it's meant to be used, as money, but using modern technology to make it much easier to use gold as money than it's ever been in the past. And gold worked great as money in the past. It's going to work even better in the future.
The immediate outlook for precious metals like gold remains volatile, fueled by the recent meeting between the United States President Donald Trump and Chinese President Xi Jinping, as well as how the market interprets current trade progress and recent comments from Federal Reserve officials. In today's talk, renowned economist and investor Peter Schiff highlights a powerful truth. Gold isn't just an investment, it's real money. He explains how, in a world where the dollar keeps losing value, gold is stepping back into its original role, a true medium of exchange. Thanks to modern technology, using gold as money has never been easier, and its potential in the coming years could surpass anything we've seen before. He points out a key issue the Fed refuses to face. While inflation numbers might seem lower, prices haven't come down. The average person still feels the pain because their dollars buy less and less each year. Meanwhile, gold quietly signals what's really happening, rising as faith in paper currency weakens. The message is clear: protect your wealth, understand what real money means, and don't get fooled by temporary good news. If you found this insight valuable, make sure to like, share, and subscribe to The Bullion Boss for more deep dives into gold, silver, and the real financial truth behind the headlines.
$4,000 gold, the fact that gold had shot up so much between FOMC meetings should have been brought up, but wasn't. Gold was completely MIA at the Federal Open Market Committee meeting. Now, considering the fact that gold is the main monetary asset, central banks now have more gold than U.S. Treasuries, foreign central banks. You would think that the rise in the price of gold would at least have deserved a question. I think it should have been front and center. I mean, the Fed should have to address that elephant in the room. But no, the topic was never even discussed. And I've mentioned on my podcast that Alan Greenspan, who people call him the maestro, and he's still held in high regard, including by, a lot of members of the Trump administration who speak about him. He specifically said that gold was his barometer of whether or not he got interest rates correct. That even though we weren't on an official gold standard, unofficially we were, because Alan Greenspan still looked towards the price of gold as a market indicator of whether or not rates were too high or too low. And so what he told Congress was $400 gold meant he was too loose, and $300 gold meant he was too tight. And so he was kind of eyeing for around $350. And so if the price of gold stayed around $350, that would indicate to him that he had got interest rates about correct. Well, if $400 gold meant that Greenspan was too loose, what does $4,000 gold mean now? What is that saying about the Powell policy? Clearly, if 400 represented too loose money back in the 80s, well, then 4,000 certainly must represent the same thing now. And so that's why it should have been brought up. And by the way, my last podcast, I titled it Gold Test $4,000 Support. And some people might think, well, obviously it failed the test because now we're below 4,000, which is the case. We did end up falling below it this week. And in fact, gold closed below 400 today, although it did trade above 4,030 this morning. But it closed below it. As I'm speaking, we're up about $20, but we're still just below 39.50. But also on my last podcast, when I talked about 4,000 support, I did say that it was very likely that gold would go below 4,000 and that 4,000 could be support even if the market was to go below. Because I think it's going to be similar to the way we handled the 3,000 support. It wasn't like 3,000 was some line that we couldn't cross. And the same thing with 4,000. We get below it. But whenever you get below it, you are in a support zone. And just like the market never fell too far below 3,000, I don't expect it to fall too far below 4,000, nor do I expect it to stay below 4,000 for any long period of time, because that would give too many people the opportunity to buy it below 4,000. And I don't think that's going to be the case. So I still think that we're at 4,000 support, even if we're trading at 3,950. I mean, we're close enough to 4,000 to say this is where the support is. Obviously, the resistance now is closer to 4,500 because we did get up to, I think, 4,400, because we got up to like 4,380. So we didn't quite trade 4,400, and then we had the pullback. But even with the pullback, where the price of gold is today is considerably higher than it was the last time the Fed cut rates. And the fact that the Fed is cutting rates and the gold price is going up is not a coincidence. Gold is reacting to a Fed that should not be cutting rates. Rates are too low, and the Fed is making them lower. And so the rate cuts are a mistake, and gold is clearly signaling that it's a mistake. But the gold that I'm encouraging you to buy is the gold that I want you to be able to use as a medium of exchange, as an alternative to the dollar, right? To use gold the way it's meant to be used, as money, but using modern technology to make it much easier to use gold as money than it's ever been in the past. And gold worked great as money in the past. It's going to work even better in the future. And by the way, on Bitcoin is back down to about 110,000, right? So it's still about 12% below its US dollar high from, was it August that it hit that high? Bitcoin didn't make a new high when gold made new highs. And when gold corrected, it didn't make a new high. In fact, it barely rallied. People were saying, oh, there's going to be a big rotation out of gold into Bitcoin. Yeah, the rotation lasted one day, and then it ended, and now Bitcoin lost whatever it gained. But Bitcoin also stopped making new highs with the NASDAQ. The NASDAQ has made a new high just about every day. Yet Bitcoin doesn't do that. So Bitcoin's not going up with risk assets. It's not going up with risk-off assets. It's just drifting down. But if we get a bigger correction in the NASDAQ, which we obviously could have at any moment, or a big rise in gold, because Bitcoin is negatively correlated with gold and positively correlated with the NASDAQ. But I think we're setting ourselves up for a big drop in Bitcoin. So it'd be a great time for you Bitcoiners to go cash out your Bitcoin and get some of the gold on my new platform. And then you'll be able to use your gold in ways that you could never use your Bitcoin. It'll actually work. It'll actually solve the problems that Bitcoiners pretend Bitcoin can solve, but that it can't. So Powell admitted, because he was asked, why are the people still upset about inflation? Because you claim inflation's come way down, but people are still upset. And Powell says, yeah, they are upset, and they have a right to be upset, right? He said the reason they're upset is because even though inflation has come down, prices have not. And he admitted that prices today are a lot higher than they were a few years ago. And that is why people are so upset? Because the high prices haven't come down. In fact, they're still going up, right? So if prices were too high and now they're going up, even if they're going up a little, you're still making a bad situation worse. Now, I agree with what Powell said. Yes, the problem is prices went way up and they never came down. But whose fault is that, right? Why doesn't Powell, or why doesn't somebody ask Powell, okay, then why are you targeting 2% inflation? If you admit that prices came way up and they never came down, why don't you target falling prices, right? Why can't the Fed pursue policies to bring prices back down? Because that's what the public wants. Why can't they get it? Because remember, right, when inflation had been too low, according to the Fed, right, it was below 2% for a few years. The Fed said, oh, no, we need to average this up, right? Inflation's been too low. We've been below 2%. We need to average it up to 2%. So we need to run monetary policy a little hot because we need to make up for all the years where inflation was lower than 2%. Well, if you admit that people are pissed because prices are so high and inflation was way above 2% for so long, why, based on the same rationale, why is the Fed not targeting inflation way below 2% to average all that high inflation back down and to deliver actual relief to the American consumer?
So here's the bottom line. While the headlines shout about inflation being under control, the truth tells a different story. The numbers might calm the markets, but they don't fool those who see the real picture every time they shop, pay bills, or check the price of gold. The system rewards debt and punishes saving, but there's a quiet shift happening, one that brings us back to sound money and real value. Gold isn't just rising because of speculation, it's rising because confidence in paper promises is fading. Each central bank move, each rate tweak, and each government bailout only strengthens the argument that true wealth lies in something tangible, something that can't be printed. The world is slowly waking up to that reality, and those who prepare now won't just survive the storm, they'll stand stronger when the dust settles. If this message resonated with you, make sure to like, share, and subscribe to The Bullion Boss. Stay informed, stay prepared, and keep watching the real story behind gold, silver, and the financial world they don't want you to understand.